The 2013 financial performance of South Africa's insurance companies reflects the industry's positive bill of health, certainly on the long-term side. Dewald van den Berg, who's Director of Insurance at PwC, joins us. We just had Deloitte, now we've got PwC. We're wondering where the EY guy is, but maybe he's still in his office in Sandton around the corner. But Dewald, this is a terrific report that you guys put together every year. I presume you take the insurance, the big life companies, financial statements, short-term financial statements, and then come to conclusions.
That's right. We look at the big 5 life companies and the big 5 short-term companies. Clearly, we can only look at those where they are publicly available. So companies like Hollard, which is a big short-term player, they would not be included because they don't report to the market. So, and what we do is we basically look at the calendar year 2013. So for your junior ends, we try and make it comparable periods so that we actually compare apples with apples.
It's pity that Hollard aren't there, but OUTsurance is.
That's right.
And just as an overall trend of the direct insurers like OUTsurance, are they taking a ever bigger slice, or have they got to their proper level now?
I think they are taking a bit of a slice. If you look at the OUTsurance results, OUTsurance as a whole has grown a lot, but a lot of that is attributed to their Australian business, UE. That's grown 74%. Locally, OUTsurance grew only 4%. Okay? But if you look at Santam, the MyWay business, that grew nicely at 22%. So there's definitely that growth in the direct market. And I think it's, you see the consumer wanting that direct access to the insurer. They want to compare, am I getting the best premium? And it's easier these days to quickly phone up a couple of direct writers and you actually get a quote, which helps.
It's interesting. If you were advising a friend who is a short-term broker, would you tell them to maybe look for a different job?
Not necessarily. I think there's still space for a broker. It depends. A broker can still add value. I think one needs to be careful because if you compare 2, 3, 4 policies, you need to make sure that you're actually getting the same cover. So it's quite easy that you might have a different excess level, some exclusions. So it's very important for the consumer to know what they're buying themselves.
Yeah, it's interesting. It's a completely different subject, but a big focus now from government on intermediary fees. And if they were to wake up and say, well, short-term brokers get 15% of your premium or 20% of your premium if it's car or house, maybe there'll be some government intervention there too. But that's a subject for a different day. We've been talking about short-term insurers. Generally speaking, they seem to be under a bit of pressure.
They've had a tough 2 years. 2012 was tough. We had large fire claims, we had floods, and we also had hailstorms. And 2013, we were almost getting out of the woods, and then November, 2 really big hailstorms hit the industry. So they incurred losses of close to 2 billion rand on those 2 hailstorms.
Was it for themselves? Had they not reinsured?
They have reinsured. I think the insurers were getting smarter. If you look at some of the retention of some of the insurers, there were bigger losses, but their exposures were slightly less. So I think they're getting smarter with underwriting, and their own retention was a bit less. So they've actually laid off slightly more to the reinsurers. And you can see that in the numbers as well.
So they got a little bit smarter on that. I spoke to Johan Jonk, who runs a website called Arrive Alive. It's been going for 11 years. And he was saying to me, perhaps the perspective that he's from, that you have to have car insurance in South Africa because it's just a matter of time. Somebody is going to knock into you at some point in time. Is this being reflected yet in, firstly, premiums, and secondly, on the rest of the world's ability or desire to accept reinsurance of car market in South Africa?
I think our big losses were due to weather-related claims, not so much the motor book, although the motors clearly would have been impacted by the hail. But that's more a catastrophe. That's not so much the driver skill and the accident side of things. Motor is very competitive in the country. So if you look at all the results, you can see the personal lines, which at the bulk is the motor house owner's content type insurance. The insurers haven't grown that all that much, but it's a very competitive market, so the rates are very competitive.
Well, thank goodness it is, because we've got one of the worst accident rates in the world, haven't we?
Yeah. So, it is something that the industry is punting, is to get to compulsory motor insurance. And I think it's probably worthwhile, because you don't want to end up, because at the end of the day, the insured consumer out there, if the person that you have an accident with is not insured, it comes down to those that are insured that have to pick up the cost.
And if you don't have insurance, like somebody I know who's very close to sitting in this chair, and you get hit into twice, well, you end up paying, generally speaking. Life insurance companies, they're the big five: Discovery, Liberty, MMI, Old Mutual, Sanlam.
Yes.
Discovery is one of those big five. Are they continuing to eat the lunch of the more established incumbents?
They're doing well. I think the other players, if you look at some of the old two big ones, Sanlam and Old Mutual, they've done really well in the last year. Old Mutual have targeted the mass foundation cluster. That's the entry level, the emerging market, and they've done really well. So they've grown their chunk of new business 14% for 2 years running, primarily through that market in the South African market. So they've done really well. But Discovery is still doing well. They're really doing well in terms of maintaining their customers on their books through the interaction with the Vitality. A lot of the people know what Vitality is, but it's their customer loyalty program, and they link it to a lot of the products that Discovery as a group offer. So it just helps that stickiness, and they really drive that to keep people with them for longer. And the longer they're with you, clearly then they make their money.
So that disruptive model still hasn't run out of road yet. What about Liberty? We don't hear much from them lately.
Liberty, I think they've turned the corner. I mean, if you go back 3 years, they had a really tough year. And if you look at the new business that they've written, and I think you can see it in the consistency of the management team there. For the last 3 years, it's been the same management team talking to you, and you can see it in the results. It's far more consistent. They've got the margin back up to where they want it on their new business, and the volumes are there as well. So new products like the Evolve product have sold quite well. So the people are liking the new innovative products that they've put out.
And MMI, whenever you get two companies, Metropolitan and Momentum, merging, in this case, it does take time to settle, have they?
I think so. You can see it. I think they've clearly communicated they're now focusing on growth. So the past 2 years for them was a focus to bring the two companies together. They are now focusing on growth, looking to build that as a big group. I think it's difficult, it's a big ship to get aligned. But if you look at a big focus for them initially was to get some expense savings. And if you look at the assumptions set going forward for next year, they have actually set the assumptions on their cost base slightly lower. So it would seem that it's actually those merger synergies are starting to come through to them.
Very quickly, who would be the star performer of the life insurance industry and the short-term insurance for 2013?
That's a tricky question. I think in terms of really growth in new business, Old Mutual have done really well over the last 2 years consistently. Short term, I think Santam didn't do badly because they've got such a big chunk of the business. And they haven't taken too much of a knock, so I think they've done quite well.
Santam on the one, Old Mutual on the other. I'm sure there are lots of people watching this thinking, yay, that's us. And a lot of people thinking, let's take Dewald out to lunch. That was Dewald van den Berg, the Director of Insurance at PwC.